what does the regulatory environment look like in the bond markets? And does SEBI have any role to play with respect to credit ratings and credit rating agencies?
Oh, thank you, Ria, for that question. Indeed, SEBI is the nodal agency, and it's the regulator who monitors the credit rating agencies. So it has got a vital role in the shaping of the rating agencies. Now, if you look at SEBI, they mandate very strict guidelines, disclosure norms, which every rating agency has to uniformly adhere to and follow. So SEBI also carries out rating agencies audit, which is done on an ongoing and regular basis. There are guidelines, protocols which needs to be strictly followed, and this is all done to ensure that there is the investor protection and the market insights are already there and integrity is maintained in the market. So SEBI has a major role to play there.
Okay,
Yeah.
understood, sir.
Yeah.
And so the rating scale is pretty much the same across industries. So how is an infrastructure company assessed differently? And what are the primary qualitative or even quantitative criteria that is used in the rating methodology for assessing infrastructure companies?
You're right. I mean, the rating scale remains uniformly applied across all the rating agencies, and that is mandated by SEBI. But if you look at the evaluative nuances of any infrastructure company, this will vary very differently from other corporates and other sectors. This is primarily because infrastructure, as Dr. Rishi mentioned, is a highly capital intensive, long gestation projects and completely project driven dynamics. And of course, there is a lot of regulatory overhaul also, which is required in this. Now, if you look at in terms of monitoring from a rating agency point of view, it's a mix of both qualitative and quantitative factors. So on a quantitative, it's broadly the assessment done on the financials, which you look at the revenue and the revenue stability of this company. You look at the profitability ratios, the leverage, how the company is levered, on the debt capacity, which is the repayment of the debt of the long-term debt over the next couple of years. You look at the working capital efficiency, the operating cash flows, and the liquidity buffers. So all these are put together, and of course there is a qualitative factors which are rigorously measured. Of course, what we look at is, or what the rating agencies would look at, is the pedigree of the sponsor who is undertaking such project, what kind of project execution or capability which the company has, and what kind of projects they have delivered, what is the operational history and track record of this company, the technical expertise the company has, uh, of course the geographic and the project specific diversification plays a key role in the assessment, and the management acumen. I mean, all together, put together, if you look at, there's a holistic approach to arrive at the ratings. uh, Now, of late, also rating agencies have started factoring in the ESG and the sustainability factors, the regulatory environment, and the counterparty risk. So all this embed together to deliver a holistic rating to the investors.
Okay, sir.